Hey guys, let me try to get one published out through TradingView. So I'm going to go over the fundamentals, the interest rate news in JPOW, and talk about our trend lines here and this double rainbow shape, because a lot of the technical analysis that I have been seeing has just gotten pretty nonsense. And this is Brian Lewis with MMT Investing, and things just changed. So let's take a look, I suppose, at this double rainbow first off. And so a lot of the technical analysis people either drawing Elliott waves or doing sort of, the trend analysis, drawing these channels, these consolidation channels, have kind of just thrown their hands up again and said, what is this thing and what's happening? And so this is a credit contraction cycle model, and we're getting, instead of a double top shape, we're getting a rounded top shape here. And the financial data shows that the credit contraction cycle should run out into the beginning of June, maybe early June, mid-June, somewhere around here. And so I've drawn these ellipses to kind of capture this movement that we have here. And so our credit contraction cycle, we got this big drawdown at the beginning, and then generally you're going to get like a bounce and a bounce and a credit contraction cycle. But we've gotten a big rolling shape, which is really interesting. And so I think if you check out this inner circle here, you can see that the angle of these bottom W reactions kind of follow the edge shape of the circle here. And here we get our first downward looking edge, and then Monday we start up and then gap up and get all the way out here. So now I've redrawn the top of this circle to just get all of these reactions, and we'll see if this comes back down. We may be looking at sort of an inverse of this kind of activity going forward, where we get back down to test the inner circle and probably get reactions across. It looks like this very long-term trend line, this is the financial crisis 12-year bull market line here, and I've been trying to work on exactly where this is reacting. And at this point, with these tops and these reactions, it looks like here is where we're getting the most reactions along this line, and this whole top here is all on top of it and back checking it. So I think this is a good spot to throw this line for right now, because just little slight wiggles in this line on a 12-year line are huge on the daily trading. And so this is our trend line that we're reacting off of now, and we want to see what we get at the end of this cycle. So this gap move up here, and this is on news of vaccines and antibodies that came out over the weekend also. And people are saying that the news is driving this, and the Fed released their reports that the economy is in horrible shape, and Warren Buffett is selling his bank stocks now. He sold Goldman Sachs, almost all of Goldman Sachs, and trimming JP Morgan. So there's really, really bad fundamental news coming out right now. And even the government is projecting high risk and downside. And the Fed, Jay Powell, did an interview this weekend and came out and said that he's completely opened QE to provide any amount of liquidity needed to keep banking functions working. And then people are saying this money is flooding into the stock market, and that is, I don't know. I would like somebody to tell me the functional operations to how it's getting into the stock market now, if that's the case, because previously how the funds are flowing into the stock market was via stock buybacks, and those stock buybacks stopped on this crash down here, and they haven't resumed. And the government is not only telling people not to do stock buybacks, but telling them if they get a bailout loan, they're legally not going to be allowed to do stock buybacks. So that's the main buyer in the whole stock market over the last couple of years, has been taken out either by fundamentals or by government restriction now. And so I'm not really seeing the the Fed's reaction pumping this up. I mean, this is a credit contraction shape, and right here, I was thinking maybe that this was a middle top and it would come down like this. That's what I was looking at earlier. And then now that we have this top, we'll have to see. Um, this this arc obviously still holds if we come back down in here somewhere and then get back and test this line or something like that, or just stay restricted out across the edge. But we haven't really gotten a bunch of outer edge moves. I mean, we got one string of those here, and so that could be possible to kind of work our way, like kind of around the edge. But most of the moves up to the top have gotten rejected down pretty hard, and so we'll see if this double rainbow keeps happening, or if this was a big switch here out of a credit contraction cycle and potentially maybe a downward target to fill the gap off of this line, and then see if in the bull case if we completely destroy this model, or in the bear case I guess would be to get down here most likely, or at least down under the yellow line and back into this model zone, and sort of one way or the other. Um, and then it still looks like kind of early June as the edge of the cycle, and this would be probably increasing volatility and getting crazier on the way down, just like the volatility was decreasing on the way up. And then starting here, this is actually a good middle for the turnover point, because this is where volatility got the lowest. I think right here is our lowest volatility point at this peak, and then volatility started to increase here. And if we get a big volatility move and a move down, then this will keep looking like a reasonable thing. So as far as the Elliott waves go, I mean, maybe a 5 wave up here, and then a 3. And then who knows? Who knows? Just kind of generic Elliott waves that aren't really predicting much of a direction or anything like that. And we had sort of this turned over kind of bear flag shape, and now we've kind of stretched it out where I guess it's still a bear flag. If we come back down, it'll look like a bear flag. But right now we're up here, and that was a huge move up on Monday that surprised a lot of people. Surprised me. I thought that we were on a lower arc, and so we'll see. We'll see what we get right now, and let's flip through the MACD and see our cycles. So yeah, this circle is sensitive. When I move the screen, the circles move around. So ignore the circles for now. I'm gonna take a look at these and see where we are on the hourly, and we have gone bullish now on the hourlies, and we're trying to come back down. So this is a bearish move down on the hourlies. Let's get out to the dailies. And so this is a huge reversal up on the daily MACD. This is the big bullish move, kind of neutralizing the daily in bull territory. And so that is kind of a month-to-month look, and that is looking like looking bullish and looking like it likes this upward trend line here. And the bears would need this blue line to move down dramatically in order to pull this red line all the way down into bear territory. So that's a lot of big moves that would be required by the bears to actually get this thing to turn bearish from right here. That's kind of the, I guess, 3 to 6 month kind of outlook if it can pull down. And then yeah, back on the dailies, we've gotten a max divergence here, and potentially it's turning over, but this is still a wide divergence trying to pull up our red line here right now. And it's flipping as we zoom in. and flipping and flipping. So this is a strong bear move from bull territory. And so in order to become actually bearish, this blue line needs to keep separated from the red line here, and it needs to get down into the bear territory and actually pull the red line all the way across into bear territory. In order to expect actual down movements, you got to get to the bear side, and then you can do, these would be bear movements down here. As of right now, it's still bullish. It's on the bullish side of the chart, but this is a bear move, and this will be very, very interesting to see what we get today. And yep, pulling down, pulling down, pulling down. So, yeah, pulling down. And so this overall looks like bear moves in bull territory, and here on the immediate, probably coming into open, we're here in bear territory and kind of waving and flipping in bear territory. So this wants to keep pulling down, but we have so let me go out to the weekly, because the weekly is where you can kind of see the next year or two. And on the weekly, we are deep in bear territory, but trying to come up and get less bearish. On the sort of year-to-year outlook, it's trying to get less bearish. And then, yeah, as you get into sort of the monthly, it's bullish right now. And as we zoom down in from like weekly to the daily kind of outlook, it's a big bear move against the bullish territory right now. So this is an interesting spot to see if it turns over or not. And if we get reversals upward here in bull territory, that would become very bullish. And if it keeps pulling down, then that's obviously going to be bearish. And so to be bearish, it needs to get down on this side and then stay down on the bearish side. And all of these kind of wobbles on the bear side would be very bearish. And if it reverses up and gets wobbles up here, then those would all be super bullish wobbles. And I don't usually pay too much attention to the actual bars, because I mean, you can stay on one side or the other for an extended period of time. It's not like it just flips back and forth reliably, especially if you're doing a reversal move or something like that. But I pay very close attention to the lines, and the depth of the line is telling you that how much this blue line is kind of pulling on the red line, and now it's pulling it down kind of to this amount. And so, I mean, this can wave or flip over. It's not like it's just smooth flips back and forth. And you can see here it just stays green a while, and here it's red and red, and it'll be different on each level of the chart. But that's just kind of an indicator of which way the blue line is pulling the red line. And so the red's kind of a general moving average for this time length, a 30, and then the blue is a shorter moving average, kind of like the shorter time length, and if the shorter time length is trying to pull this one down or not. And so yeah, very long term, still bearish and getting less bearish. Medium term is bullish and looking to stay bullish. And the immediate is starting to turn bearish, but it's still in bullish territory. And so, yeah, just, I guess on the technicals here, we want to see, let me get, 10-minute chart, I guess. We want to see if a bearish move just results in kind of a flat, and then if we get another bullish move up, that would probably break this model and potentially signal the end of the whole credit contraction cycle here, and we might get into a new phase. And if the bears do pull this thing back down into this zone, then that's still inside of this model and this credit contraction cycle. So that's the general outlook. And the news on the antibodies and the vaccines and everything that came out this weekend, the big news is that the top vaccine from Moderna is just finished phase 1 trials, which means they tested it on enough people to know that it's not going to make people sick to inject them, but we don't know if it really works yet or not. And they're going to go to phase 2. And then on the Sorrento, the antibody company, they had positive sort of test tube and fermenter tests, and they're going to apply to go to phase 1 in the next couple of months on the antibodies. So the antibodies and the vaccines are moving forward, but it doesn't look like we're going to get anything substantial before probably the end of this year. That's more of an outlook for next year to try to get vaccines and antibodies out. And then the at-home testing, there's a company. Oh, what was the company that's doing the at-home testing? I forgot. Everlywell. Julia Cheek of Everlywell. Yeah, so Everlywell is producing at-home testing kits, but they have a supply crunch because their main swab company is in Italy, and so they're trying to ramp up production of the at-home tests, and that looks like it will take probably out to the end of the year to actually get a supply of at-home tests that would be useful for everyone in the country to be able to get access to. But they're providing small amounts of those at-home tests to medical professionals right now. So if you're in the medical professional field, you could go to the Everlywell site and check out their swabs. And that's basically the news right now. And J-Pal and Munchin are gonna testify today, and we'll see what they say about the interest rates and see if that changes the long-term outlook here. And so right now we're seeing interest rates going down, and the Fed usually doesn't like to announce when interest rates are going down. They sort of do it past tense, like emergency rate cut. On the way up, they're like, oh yeah, we'll be raising rates for a while. But if you listen to a lot of different economists that talk about interest rates, really is just a function of the GDP and the inflation numbers. And that's how the bonds trade, and the interest rate is just a result of the bond trading. And the Fed really doesn't control them. They try to, and they announce levels where they want people to trade interest rates and things like that and trade the bonds, but they don't really hold up. And then they have to announce that they changed when it moves away from where they wanted it to go. And so, like Jeff Snyder says it in kind of a shocking way, like, oh yeah, the Fed doesn't control the rates. And then you hear Warren Mosler saying, like, just kind of joking, like they think they're driving the car, but they have like a little fake steering wheel. And then Raoul Pal just recently this weekend, he's releasing his whole thesis on the entire state of the economy and the shape of this thing and the new investments, which is really cool. I'm gonna go do a whole set of videos on that. But he just says it matter of factly, like it's just the interest rates and the GDP and some futures that determine the bond trading, and that's what drives the interest rates. And he sees the interest rates coming down, and if they come down to negative rates and you get a steepening yield curve but negative rates, then that will be an indicator of deflation on the world economy, which just means the world commodities would be dropping faster than currencies, and other currencies would be dropping faster than the dollar, and probably the dollar would be decreasing relative to gold. And you can use the interest rates to see kind of how fast the recovery would be, and what we're getting in terms of deflation. And so right now we're kind of getting towards a late cycle in this credit contraction, and we're looking for a switch into an expansion phase. And right now it's pretty critical to see if we stay in this contraction cycle or if we blast out of here into the expansion phase. And this week we will see what we get, what it looks like. And there's not a whole lot of technicals right now or cyclicals or anything that says what direction it's going to go immediately, and most of the fundamentals are really long term. And fundamentally, you should probably expect upward movement in the near term. And so that's the whole outlook. And please hit the like button to help me out with the YouTube algorithm. And I have playlists with financial education and the medical stuff and these stock picks. And this is not investment advice. And yeah, happy trading.